Good morning, all, and welcome to another one of my videos. I hope you are well. I have one pair on watch today, and that is once again Pound Aussie. So, for those of you who watch my videos regularly, you will notice that I have changed the colour scheme ever so slightly. This was not my idea, this was the idea of Mark Hutchinson, who, for those of you who are not in the Falcon community, is the Falcon founder and the person that I learn my trading techniques and strategies processes from. So I'm sure there is science behind it. I haven't found out what that science is at the moment, but pretty much everything he does is intentional and there's some kind of logic behind it and has been well thought out. So I've just changed the color scheme. And what I quite like about it actually is the fact that it kind of distances me in my mind from the trader I was when I first started, given that I've kind of used the same color scheme since I first started. It kind of distances me in my mind from how I was as a trader and the level that I was at skill wise when I first started to where I am now. So clean, sometimes you need a clean slate and to just brighten things up a little bit and refresh things. But without further ado, let's break this pair down for you now. So on the higher time frames, the daily chart, and just to touch on it, if I don't normally mention this, but if anyone is watching this from outside of the Falcon community, feel free to, you're welcome to join. There is a link, if you're watching this on YouTube, there is a link on my YouTube channel where you can actually sign up. It is my referral link. I am an ambassador for the Falcon community. I don't normally give it a plug, but you're welcome to at least have a look and see if you like what you see. And if you do, you are welcome to join us. And if you're watching on TradingView, there will be a link. It won't be a clickable link because my membership plan is just the essential plan at the moment, but you can certainly find that link either on my YouTube channel or on my Twitter profile. But without further ado, let's break this pair down for you now. So I am looking at this pair because on the higher time frames, as I see it, we have the thing that stands out to me the most is we have this sharp hook point here, okay? If I just zoom in, you do have to zoom into this one ever so slightly, but we have this move here. We have this sharp move up, sharp move down. That tells me that there was potentially a lot of orders placed in this area in a very short period of time. You can see one, two, in 2 days, there was likely a lot of orders. There's two daily candles there, two orders placed, 2 days worth of orders placed in there, and then a sharp move down. We sold off very aggressively, meaning that there was potentially a lot of liquidity there. We then wick. There's a lot of wicks on Pound Aussie. It's that kind of pair. We wick to that area and then we push back down. Okay. Now it seems logical to me, given that the wick happened. Given that we wicked down from almost exactly the same area, it seems logical to me that the support and resistance traders would have had their ray lines plotted as we have plotted them here. But where they differ from us who trade the Falcon strategy is that they believe what was previously resistance becomes support once it's broken above. Whereas in the majority of cases, we see exactly what's happened here. We see this break above, they start buying, and then it crashes to the downside, which is partly why we don't trade support and resistance. We're aware of these levels, if you want to call them that, but we don't look at them in exactly the same way, particularly on the higher time frames where people are typically getting themselves caught the wrong side of the market. And one of the reasons that this happens is because, as I've said previously, brokers and many other trading platforms put out little ticker feeds which say things like Pound Aussie at 3-year high once it breaks above here or once it taps into that area. That encourages FOMO, and it's purposely done regardless of what they tell you. That encourages FOMO, which encourages these people to start buying the highs because they think it's just going to keep going to the moon. I'm sure you've seen that on TradingView. Pound Aussie going to the moon, or similar sentiments amongst people that don't see the markets as we do, and then they start buying. Okay, particularly as I've said, when they see what was previously resistance as support is now being support, so they think. The other clue for me that we may be headed to the downside on the lower time frames is that we have a near miss. Admittedly, it is a wick. It would be better if it was full-bodied price action. and less of a volatility wick, but we do have a near miss down to this area here. I could have put my ray line there, and that would still be a near miss. So these near misses, when price fails to tap into it fails to tap into an area, but it gets close, then that's often a good sign that we will find our way back there to take out that area before potentially either a larger correction in the area or a reversal to the upside. And one of the reasons I've got my ray line placed here is because if I just do this, you can see that we have a piece of structure there, and this is kind of the 90% rule of this piece of structure. So we call it the 90% rule because when price breaks the lower trend line of it, it has a 90% chance of getting 90% of the way to the start of the structure, and this would be a good profit taking area for a lot of people. So it makes it more likely that price will gravitate to an area such as this if it also happens to be the start of a structure. So that's just another thing that I'm factoring in. Another thing, just to touch on how these patterns that we look for repeat themselves, and I literally just noticed this before I started the video, is that if I just pop a ray line on here, if I can get it on exactly, we'll do it to there. That's close enough. So we have, what do we have here? Sharp move up, sharp move down. Okay, price moves up in a fairly non-progressive way. We then wick to the area. In this instance, this is more typical of what we do see. We wick to that area, but near miss it. Okay, so remember me saying that when we near miss an area, it's often the case that price will still find its way back up to that area, break the high. People believe that this is now support. The brokers, as I said, uh, help that theory by putting out things in their ticker feed, and then it crashes to the downside. So we have sharp move up, sharp move down. We wick to that area, we push down, we break the high, and then we drop. What did we do here? Sharp move up, sharp move down. We wicked to the area. In this case, we actually tapped it, but we didn't break above. And then we dropped. We then come up, we break the high, and then we drop. So the patterns that we look for repeat themselves because human psychology repeats itself. Okay. So the first question that I asked myself with all this considered is, am I well positioned for a move to the downside? Well, yes, we've tapped into that area, broke above, pushed back down, and now we're trading well and truly below it. And even if price was only to move down to here, or to stall in that area for a long period of time, given that this would be a good place where people would likely be taking profit, there is more than enough profit potential down to there. There is no reason at this moment in time for price to suddenly blast to the upside. Okay, of course, things can change in trading, but there's no reason for that to happen at this moment in time. So I'm well positioned. The next thing I ask myself is, what does the sequence look like? Well, as I've said yesterday, if we just drill down to the 1 hour, we did start with a larger correction. Typically, we don't see these larger corrections, which are this wide, relative to the impulse down which has preceded them. If we're going to move to the downside, and one of the reasons you have to be mindful of these is because they can easily turn into, something like that, a bull flag to push higher. So at that point, we wouldn't have necessarily known or been able to anticipate with accuracy that price would push down, but we broke out of that. We then have the tighter consolidations, which are proportionate, and that's important, which are proportionate to the move down which has preceded them. Then we come into these slightly larger tight corrections. Then we move into this larger correction. We break the highs of these of this larger correction, and then we move to the downside, and then we have this fairly nice sequence. So I'm satisfied now, particularly as we've dropped out of all of this now, that this is well and truly in a state of continuation. Okay, so for more moves to the downside. So previously yesterday, you remember that I was looking for a risk entry up here because we had this 1, 2 potential 3-touch move, which would have tapped into this area where once again there was a sharp move up followed by a sharp move down. However, what did we do? We near missed it. We got close to the sharp hook point. We near missed it. And then we came down again and we formed this larger correction relative to this move down, which was a corrective move down as well, which is also a factor in my thinking. And then we dropped out below here. Now, this looks like it could potentially be a bit of a trap to me, okay? So if we had come up, let's say, for example, this had come up like this, we tapped into the area, pushed down, and then we had flagged as below here, which we are doing now, then I would be looking at this for a potential risk entry. So I would have my ray line plotted as such. If we just try that again, I would have my ray line plotted here, and I would be looking for risk entries within this area here, because we have the move down, we have a correction which is proportionate to that move down, and then we could be seeing further continuation to the downside, because we would have washed out all the orders that were up here at that area of value. However, what, as I said, we near missed that area. We also have this correction here, which is very wide, very large. It pulls back. How far does it pull back? If we just measure that from the top to the bottom, we pull back 70% of the move. And when we near miss an area of value, and we have a correction which pulls back, that far, 70% of the move down, and the move down was corrective, not impulsive, that gives me a clue that this is potentially, whoops, I've got the wrong tool on here. Let's try that again. This whole thing is potentially just a middle section within this impulse correction continuation, within this potential impulse correction continuation to the downside. And one of the reasons that makes me think that is because at 7 a.m. this morning, UK time, we don't trade the news as such, but 7 a.m. UK time, annual CPI in the UK comes out. And it's my thinking, normally I wouldn't probably have this on watch because of how far away we are to this value area, which we've yet to tap into. But because we have CPI coming out at 7 a.m., that is often the catalyst, which could cause an impulsive move up to this area by the end of the day. Okay. And with that in mind, what are we looking for today is the following. I'll be looking for price to tap into this area of value by the end of the day. And then if that was to happen, I haven't put a trend line at the bottom because we haven't really pushed away from this area yet. But if that was to happen, we would have what we call an expanding pattern. So if we tapped into that area, we would have highs which are equal to each other, followed by lows which are lower than each other. So if we have a trend line sloping to the downside like that, and then equal highs or highs which are higher than the previous highs, that is what we call an expanding pattern. So if we were to tap into this area by the end of the day, because we would have to do so somewhat impulsively, given that this is a daily forecast, and if we just count the candles, we would have to get to this area quite impulsively if we were to do so by the end of the day. So for that reason, if we push up to that area, I'll be looking for a push down followed by a tight flag in keeping with what the rules of my trading plan actually say. And then I will be looking to get short either on the break of the flag or within it, and I would be able to manage this depending on obviously the size of the flag, the tight flag, for something in the region of 3 to 4% down to these lows here. Of course, this could indeed just push to the downside. This is more than enough, healthy enough correction for price to just push to the downside. But because of all those factors explained, because we are coming up to CPI in an hour and 40 minutes time, and because we've had this near miss to that high, this kind of near miss to there, and because this correction was very wide relative to this corrective move down, that's what I'll be looking for today. And if this just tanks to the downside, then I'm not bothered. I know what I'm looking for, and I know why I'm looking for it, and I'm not interested in things which carry much more risk simply because the entry is actually there. I'm just gonna, and even if we were to measure, for example, if we take the start of this move down to there, and we measure it to the base of this correction here, even if we pulled back into this area by the end of the day, that would be a pullback of something in the region of 35-36%, which would be a nice healthy pullback relative to this move down, for continuation to occur to the downside. And with pairs like pound Aussie, another factor in my thinking is with pairs like pound Aussie, they do typically correct for a little bit longer than some of the more impulsive pairs. So that also makes sense why that price might find its way up to this area of value by the end of the day. So that is my forecast. That is my thinking. We shall see what happens with CPI. Of course, that can be the catalyst, for price to just tank to the downside, and that is in my thinking as well. But We don't know what's going to happen in trading. We can only know what we're going to do. And so long as we know what we're going to do, then that keeps our emotions in check, which are one of the main reasons why many traders fail. It's not that they're not technically advanced enough. It's just that they can't manage their emotions in a lot of way. Can't manage their emotions, and I'm now doing a lot of things which keep me mentally sharp and mentally savvy. And you may have noticed that in the way that I speak from the videos that I've been making recently versus the ones that I used to make some time ago. But that is enough from me. I will be back tomorrow if I have a pair or pairs on watch. If I don't, then I will not make a video, and I will not be looking to chase trades which don't meet my rules and my requirements. Thanks for watching, folks. Have a great day, and I will speak to you again soon.